All right. What's going on, everybody? I hope everybody's having a blessed day. Welcome back to the Prolific Ones channel. You already know who I am, Jordan, also known as Intraday J. I don't know like the other names that people give me, but they call me him, Timothy, whatever. But today's video I'm gonna be breaking down my entries for FOMC of last week, which was the 2nd of November 2022, and also even though I wasn't able to take this entry for NFP on Friday of November 4th, 2022, I had a markup for it. It went about 600 points plus into profit. But I just want to make sure that you guys understand I was not a part of that trade for NFP. I was a part of the trade for NFP FOMC. The only thing is with the FOMC trade, it was a live markup. I was not able to take a screenshot for it. So, for those saying, oh, hindsight, I have a recording of me actually taking the trade live for FOMC. But today, aside from that, we're gonna get right into it. We're gonna go over the FOMC entry. Why was I looking for a short on US30 and how I was, what was going through my mental process during the price action that we got for FOMC. So let's get right into it. Right. So here we're gonna go to the 2nd of November 2022, and I want to break down everything that went on during this day. Right. So as I'm actually so before I do anything, I just want to let you guys know I am not a financial advisor. You guys are going to see that already with the whole first page that comes up. But again, I'm not a financial advisor. Everything that I show you guys, one, back tested, study it. Do not just take my word for it and apply it to a live account. Apply this to a demo account. All right. Um, the way I learn how to trade, how I trade, my methodology is based off of ICT's concepts. You can find his YouTube channel on YouTube, called the Inner Circle Trader, or short for ICT. His stuff is amazing. It really works. Myself and people in my group chat are proving that it works every single week, every time we trade in the markets. So for those who saying it doesn't work for you, it may not work for you, or maybe you just haven't studied the proper way. Maybe you're, looking at people on Instagram, with the other smart money concepts that are, basically watered down versions of ICT's concepts. You don't want to study those things. You want to study just ICT if you're looking to get into smart money, quote unquote smart money, right? ICT is the mentor of your mentor, right? He's my mentor. So shout out to ICT, shout out to you, Michael. I appreciate everything that you've done and everything that you're doing for the community. And without further ado, let's get right into it. So I'm gonna be honest, guys. The first setup that I did take on US30 was within this price action. Like during the open of FOMC, I was looking to go short in a fair value gap up here, and at that time what I identified as a premium. But obviously market manipulation, prices ran right through it, taking my stop loss. So the first trade that I did take, it was a loss. Nothing to worry about. I use proper risk management. I understand and accepted my risk. So therefore I took the trade. Losses happen. There's no such thing as 100% accuracy in the market. We're all wrong. We're all wrong until the market proves us right. So therefore, it doesn't matter what you study, how you trade, you're going to take losing trades, whether you want to believe it or not. Right? It doesn't matter what indicator you use. It doesn't matter what algorithm you use. It doesn't matter about any of that. You're bound to take a losing trade. So get that, oh, I'm a perfect trader. I'm 100% accurate. Get that mindset out of your head, because going into the market with that kind of mindset, it's only going to set you up for failure, and you will lose your money. Right. So now that we got that out of the way, right, it made sense. The reason why I was looking at this price action to go short was because I had identified from my perspective, right, a dealing range where I see price take out buy side liquidity and we took out sell side liquidity. and we created that dealing range, right? We had that displacement. So what I wanted to do was go short when price trades up into a premium, right, within this range. And as we see price, because of the FOMC manipulation, trades just above this high, taking out whoever would have went short into this and placed their stop loss above the high or anywhere in this range, price took them out. So after price did that, what I had did was just wait because I still had that bearish bias in my mind. The reason why I was looking for price to be bearish on FOMC was because one, on the daily time frame, we had a bearish order block, right? This is what I perceive to be a bearish order block. And also looking at the weekly time frame, I was looking at this fair value gap on a weekly time frame, and we also had a weekly bearish order block that I was looking for price to potentially sell out of, which we did sell out of. But then, as you can see today, November 10th, 2022, price is currently bullish, which I did catch a buy today, on US30. I will make a video on that sooner, sometime like tomorrow or sometime this week. But back to it, right? So that's where I got my bias from, off the weekly and the daily time frame for me to go short on FOMC. Now the first entry, as you guys can see, the placement, right? The entry and the stop loss placement was incorrect. The bias was correct. So I kept in mind, all right, price was still bearish. I didn't revenge trade. I didn't get in as soon as price took my stop loss. I waited, right? I waited for a setup that made sense to me to get into the market, a setup that allowed me to feel comfortable with my risk, that gave me a high probability entry to go into the direction where I had perceived the market wanted to trade to, right? In terms of liquidity. So let's break that down. So first things first, here, right, we already went over. I took a loss on this first entry. So now price, whenever we take out whenever we take out a high or a low, also known as buy side or sell side liquidity, the market, after taking out buy side liquidity, you will notice if you back test, the market sells off. Whenever the market takes out buy side liquidity, you will notice by back testing, the market buys up. So now that I understand, all right, we have price, we took out buy side liquidity from this high. Let's go to the 5-minute. Right, price, we took out buy side liquidity. That's what this black line is indicating. So let me delineate that. Right, BSL stands for buy side liquidity, for those who may ask that in the comment section. So BSL's buy side liquidity, and also keep in mind, right, I'm going to make this line red. Right, this is the daily order block that price traded up into. So here, right, we have the red line, that's the order block. And this right here, Tuesday, right, this is the previous day's high. So in bearish conditions, when price takes out the previous day's high, we would anticipate bearish price action. In bullish conditions, when price takes out previous day's low, previous week's low, we would anticipate potential market structure shift to the upside. But since we were bearish at this time of price action, I anticipated price to sell off. So now that we have that done and out the way, let me just move this. So I want to bring to your attention how price trade on the 1 minute, which is where I got my entry. So again, just want to let you guys know this is all happened live. Recording, it's already set. I don't have a markup for this, but I do for the NFP, which I'm gonna show you when I get finished with the FOMC breakdown. So in my mind, when I'm watching price do this live, I'm still keeping in mind the bearish bias, regardless of what price did at the open of FOMC, because to my understanding, this is all market manipulation based off of my experience trading US30 for going on about 2 years, right, using ICT's concepts. So over time, experience tells you and shows you what you should be looking at, what you shouldn't be looking at. So after I saw price start to stall, we weren't exploding to the upside as much as we did at the open. And price, after we took out previous day's high and continued to respect, right, this red line, which is the bearish daily order block, we sold off after taking out buy side liquidity from this short-term high right here, right? So now we have buy side liquidity taken, and we have sell side liquidity taken from this short-term low. So now what's going on in my head as I'm watching this, we have a potential dealing range for price to go short, right? We have these relative equal highs, even though price did take out this high right here. Price initially, not initially, price finally took out the high right here, and then we sold off, creating displacement, right? This fair value gap to the downside, and leaving us a bearish order block to go short at. So here I'm going to mark off, right? OB stands for order block. And this is what's going on in my head when I'm watching price. Keeping in mind we're bearish. Now, since we're bearish, I'm saying to myself, where does the market want to trade to in terms of liquidity? Also, I just want to let you guys know, from this trade setup, I secured only 500 points, right? 5,000 pips from this trade, even though the market did go, about, I think, 1,000 points or something like that, or 1,100 points in the profit. I have my system where I get out at a certain amount of points and I'm satisfied, right? I don't get greedy. I understand I have a system. I give myself rules, so I don't have any emotion whenever I trade, right? Yeah, I could have made more money. Do I care? No. The reason why is because I have my rules set in place. So understanding this, right, as we're watching price, my entry, I understand this is my bearish order block, and I did not like that price had given us this kind of stop loss, well, giving me this kind of stop loss, which is 114 points, which is 1,140 pips. So I did not want to have this kind of stop loss. I did not want to place my stop loss above this high. So instead, what I did was gave myself about 50 points of risk. And if the market were to take out my 50-point stop loss, which is 500 pips, I would just simply get in again, right? And just put my stop loss just a little, give myself another 50-point stop loss. Which I honestly, it didn't happen, but if that did happen, I would still have been risking 100 points. But that's just me, right? I know it sounds a little silly, but it is what it is. If you don't feel comfortable with the risk, again, don't take it or lower your risk. So I gave myself 50 points for my stop loss. So let's do this right now, 50. And boom, 500 points, which is right here, for my take profit. Right, this trade was in and out. I was in profit, like the market came to my entry, went into profit immediately, very quick. So now in this case, I have my entry area marked off. I have my risk defined and accepted. Now, what's next for me to do is just wait for the market to trade to this area for me to get in. Yeah, I could have took my entry at the wick or the low of the order block. I decided to take mine at the open of the candle, right up the order block. So all we're doing right now, watching price. Also, like when I was watching price live, I threw on a fib just so I can understand what is premium, which is a deeper premium or not. And we have the order block in a deeper premium, right? Above the 62% is a deeper premium. I did not take my entry at the 62%, although the market could have easily just traded right to the 62%, right, and mitigated right out of this low and sold off. It could have done that, but again, coulda, woulda, shoulda. It didn't do it. It traded right to the order block, and this is where I got my entry. So, right, let me just put BSL, buy side liquidity. So here's my dealing range, and I have my entry at the order block. And as we're watching price here, right, as you guys can see it, price trades right to the area of my entry. Right, you see it? So price trades into it and then immediately starts to trade to the downside. I did not take any partials on this trade because of how price was trading, and we just melted to the downside, right? So once I got in, right, no drawdown, filled my entry. Well, it was a market execution anyway. The market traded right into my direction just like that. So within literally 11 minutes, just 11 minutes, price gave 500 points. Well, even more than 500 points, but I secured 500 points because that's my system, right? I understood that the market was looking for sell side liquidity. We're looking to target sell side liquidity, and I was looking at these relative equal lows down here as a target because I understood from a retail perspective, this is where retail is looking at as support. Right, we have resistance, resistance, price breaks, retest, buys up, retest the support, buys up, retest the support again, buys up. So in this case, where would price be looking to trade to? Right here. We have relative equal lows. Stop losses will most likely be, if not above these highs, then most likely below the lows, which is where the algorithm will be targeting. Stop losses to take sellers, it's not sellers, take buyers out of the market who have their stop losses below these lows, and to also target sellers who are looking to sell on the breakout below these lows down here, right? There are sellers selling below the selling below the lows of these lows up here, selling on a breakout. There are sellers below here, using the sell stops to sell on a breakout below these lows. So the breakout artists up here, they get taken out, and ultimately I'm looking for price to target these lows, which is exactly what we did, just like that. So yes, in all honesty, I could have held for more and potentially collected, right, this entire move, which would be, if I would have held from my entry all the way down to my take profit, right, about 1,133 points, right, which is 1,100, 11,000, 330 points. That's fine too. That's more than fine. That's really great. But 500 points, can't complain about that either. So that's what I was looking for FOMC, right? Very simple, very textbook, and immediate profit, no drawdown, great day. So now let's get into NFP and why I was looking for a price to be potentially be bearish for NFP based off of the 4-hour time frame that I was looking at. All right, so here we are. So now, here's Friday, November 4th, 2022. What I was looking at, right, and here's the markup, November 4th, 2022. This was on the 5-minute. I was looking at, and I'm gonna show you the 62% of that range that I was looking at. So here is what I was looking for my entry, right at the 62%, which was also at the bearish order block right here. Now, here we go. Boom. Well, I actually had my sell limit at was at the 50%, right? The mean threshold of this. So instead of, catching the entry exactly at the 62% of the fib, I used this right here, right? This order block measured from body to body, what open to close. And I used my fib to measure the 50% of it for my entry. But at the time of price action, one, I was going to the gym. I know these sounds like excuses, but I don't like to have limits in the market where the market doesn't look like it's going to give me a high probability setup. So instead, since I was already in the gym, I deleted the limit and my alerts went off and I saw a price trade right to it. I'm like, all right, probably would have taken a loss anyway. But instead the market traded right to this area where I had my limit at, and then it just nosedived away from it. And I was like, oh, hey, fuck it. It is what it is. So just to break down again, and again, I was not a part of this trade for NFP. I'm not worried about it. I had a profitable week last week. I'm currently still profitable this week. So I'm not complaining. Now, to break down why I was looking for a sell out of this bearish order block was because I had already saw that price. We took out buy side liquidity from these highs, and we traded out of a bearish daily order block. And also we were trading out of a premium, what I had perceived to be a premium out of the weekly time frame from this high to this low, right, using the fib. I just did it the wrong way. Here we go. Right, premium, right, just above this old daily high and also into this fair value gap on the weekly and this weekly order block. So that's what I was looking at to continue to sell going into NFP and going into like earlier this week, but I switched my bias because of what price action was giving me instead. So here, right from this high to this low, the reason why I was looking to go short, right, we have buy side liquidity taken, and we also have sell side liquidity from these lows taken. Right, and you're probably going to be asking, why not this low? Why not that low? Why not these lows? Price, as long as we take out sell side liquidity, that's what I use as my dealing range. You can refer back to the videos on ICT's YouTube channel, and also you can refer back to, I think, my most recent video that I dropped on how I use the dealing range to stay profitable. I believe that was the how I turned $500 to 11.5 or whatever $1,000 in less than a month. You can refer back to that video as well. So, just to continue here, right? I define my dealing range based off the 4-hour time frame. We have the high and the low that takes out buy side and sell side liquidity, and we have a premium price range identified, which has a bearish order block on the 4-hour sitting right at the 62%. So if we were to continue to be bearish, we would have most likely took out sell side liquidity, but now since we have hindsight, price did trade to this area, and if we did use the fib, from where I would have got in, right? So from 50%, actually, I'm going to use this right here to the low of this candle, right? We have 666 points of potential profit, and actually a little bit more. So 672 points of profit. But as we see, the reason why the market did not continue to sell off was because we failed to take out sell side liquidity. Now, here's some source. Whenever you're trading in bearish conditions and price trades into a bearish order block, bearish fair value gap, or takes out higher time frame buy side liquidity, once price does that, but fails to take out sell side liquidity, the market most likely is going to reverse to continue to target buy side liquidity. And if we're in bullish conditions, if the market fails to take out what I was saying highs, right? If the market in bullish conditions, if we trade into a bullish fair value gap or a bullish order block, or we trade below sell side liquidity, if the market fails to take out buy side liquidity, the market most likely is going to fail to trade higher and continue to target sell side liquidity. Right. So one more time, I'm just going to say that, and because I kind of like messed it up a little bit. So if price trades into a bullish fair value gap, bullish order block, or trades below sell side liquidity and gives us a buy up, if the market fails to take out buy side liquidity, the market most likely will sell off, right? Vice versa for sells. And in this case, since what we literally witnessed, right, price trade into a bearish order block and fair value gap in a premium, and we failed, right? Price failed to take out this low and also these lows. And what do we do next? We continue to buy up, right? So this is something you can also back test. I want everybody who studies this video, who studies me, who studies ICT, or studies anybody, before you apply it to like any kind of live or demo account, back test it. Find at least 100 to 200 examples each, at least each week, or every 2 weeks, you find at least 50 to 100 or 100 to 200. The more you see these setups happen, the easier it is for you to take them, and whether you're trading live or demo. It's very easy. Your confidence is there because you've seen it happen over and over again. You're not going to hesitate to take the trade. You're not going to get excited because you understand what's going to happen, right? No emotions when you trade, because if you have any kind of emotion when you trade, that's going to fog your judgment. And essentially, if the market doesn't meet your expectations, it's going to hurt your feelings, and worse, well, it's going to take your money, but worse, hurt your feelings. And you're going to remember that, right? Your brain never forgets the pain or the trauma that it endures. So keep in mind that happening, guys. So I want you guys to study this, back test it, have at least a sample size of 200, 300 examples before you apply it to a demo account or a live account. I'm not saying applies to a live account at all. That will be up to you, right? I strongly recommend use a demo account. I don't trade demo. I'm not, and I only trade live. I'm not saying that to entice you to trade live. Trade demo. Only trade demo if you don't have the experience, if you don't have the confidence. Trade demo. There's nothing wrong with it. You're getting your practice in. You're getting accustomed to how the market moves. You're seeing the fluctuations between the pips or the points and your MT4 or MT5, right? The only difference is it's not real money. That's it. So you're getting some experience with it, with the market movements, but you're not experiencing the emotion of loss of money or the financial burden of losing your money, right? That's it. Until you get to that point where you feel comfortable to fund up a live account or take a funded challenge, trade demo, or just what is it called? Paper trade on TradingView. There's nothing wrong with that, guys. But until then, that is all for today. And I will see you guys some other time. Hopefully, if not this week, then probably next week, I'll be dropping another video on, breakdowns on what happened this week, the trades that I did see, what made me take the trades that I did take this week, based off of how price was trading, and what made me switch my bias from being bearish to being bullish this week, right? So that is it for today. Don't forget to obviously support. Support is free. Liking the, pressing, hitting like on that video, definitely free. Sharing, commenting, subscribing, all of that is free. Support is literally free, guys. You don't have to pay for it, and I would greatly appreciate it if you did so, right? So everybody have a blessed rest of your day. Continue to stay profitable and continue to be a student and learning in these markets. All right, guys, I'll see you later.